Okay, gentlemen, so today we are going to start chapter 12. It is about project cash flows. So allow me to say Bismillah, Alhamdulillah, wassalatu wassalamu ala Rasulullah. Rabbi shrah li sadri wa yassir li amri. Wahlul uqdatan min lisani yafqahu qawli. Assalamu alaikum wa rahmatullahi wa barakatuh to each one of you. So we are going to discuss chapter 12. It is about project cash flow. So we know that cash flow, like we have, if we have a account in the bank, so then if we deposit, so cash flow in, if we take out money, so it will be cash flow out. So similarly, if there is a construction company and they have project, so how they are going to spend money for the project and how they are going to get money against progress payments from the owner. So actually in this we are also going to learn how to develop S-curve practically. So as you know that we are I'm teaching in Saudi Arabia, so students are Arabic speaking. So I'm not putting only the bullet point, but I'm putting like a statement so that when student they need to read my slides so they can have a understanding, about the sentence. What's the meaning, so it should be easy for them to grasp the meaning. If I'm just going to put only words, then for them it's difficult, But in English speaking country, this could be like you can put just the bullet point and you speak, so then student can read from the book. Anyway, so let's move to the topic. Is for project cash flows. The statement of cash flows tells us how much cash has been received and paid during the accounting period. Construction contract cost include direct cost, indirect cost, and profit that they can be reasonably allocated to the items of the contract and allowable under the terms of the contract. So when we have like to prepare the bid, we prepare with the direct cost and then indirect cost. Indirect cost, or some people say really overhead cost. And then the profit that the owner want to include in their bid. So now we are going to learn what is mean by direct cost and indirect cost or overhead cost. Cost of material, labor, equipment, or subcontracted items or subcontractors cost that permanently and physically integrated into the project are called direct cost. So that become part of the project. Whether it's material and labor force doing that work and equipment that we are using to construct that part. So it's a direct cost. Then indirect cost is many things inside. Indirect costs are frequently referred to as overhead expenses. Overhead expenses, for example, rent of the office or the utilities for site office or overhead, headquarter office, and general and administrative expenses. Like engineers' salaries, officer salaries, accounting department cost, and personal department, human resource department cost. So the overhead expenses include accounting fees, okay, advertising fee, or there is insurance cost, legal fees for the company, or there is a labor burden that we pay to the labor, that or rent for the building, for the office, repairs or supplies to the office, like stationery, etc. We pay taxes, the telephone bills, travel expenses, utility bills, like for water supply, for electricity and for telephone. Overhead expenses are the portion of indirect cost and relate to the project, but not to just one project. So overhead costs, they are not related to just one project, but they can be like these costs can be for used for other projects. So every project has to decide that how much overhead will go to a particular project from a headquarter office of a company. Indirect costs are generally calculated and are spread over the project monthly as cost. And so we calculate these costs, and then per month, the same figure we are going to divide over the schedule of the project, the construction period of the project. So now we are going to learn there is a 4 activities are scheduled across a 4-month time. There is a figure 12.1. So how to develop the S curve? This is like we are going to learn in this that how we can develop a S curve with a simple example. The direct costs associated with each activity are shown above each bar. Monthly indirect charges are $5,000. Monthly cost can be calculated as so for say for direct charges for the second month, we that if we move to the figure, so activity A is like half of that cost is 50,000, so it will be 25,000. Activity B is half of 40,000, 20,000. Activity C for this second month will be 1/3 of 60,000, 20,000. Total will be 65,000 for the second month. Okay. Then when we see the figures, so we will inshallah explain all these for each month. Then the owner may require the contractor to provide S-curve of estimated progress and cost across the life of the project. So when people submit a bid, so owner at that time is asking that they should submit their S-curve. So what explaining. So what is S-curve? It is a graph of cumulative activities plotted against time. Allow the progress of a project to be tracked visually over time and form a historical record of what has happened to date. Analysis of these curves allow project manager to identify project progress, growth, if there is a behind a slippage of the project, and potential problems that can adversely influence the project if no remedial action is taken. So this S curve is very important, for the project managers, that you can see the project progress, how your project is progressing faster or slow, or there is slippage. So then we can take corrective action. So figure 12.1 shows the total monthly and cumulative monthly expenditures across the life of the project. Now we will see the figure, and we are going to, inshallah, I'm going to describe the whole, how we can develop the S curve. Okay, from this slide. This is very important slide in this lecture. So here you can see we have here time on in months on x-axis. Time on the x-axis, so it's a 4-month project, first month, second month, third, and fourth. And then on y-axis we have the activities, work activities A, B, C, and D. Work A is going to start at time 0 and going to finish at the second month. So total cost of this work is 50,000. Work B is going to start at after month number 1 and going to finish in 2 months, and total cost of this work is $40,000. Then work C is going to start at middle of the second month, and it's 1.5 months, so it's going to third month. Total cost of this work is 60,000. Now work D is going to start after 2 months and going to finish at month number 4. So total cost is 30,000. Now we see how these costs we can bring monthly direct costs, because all these costs what we have seen for activities, they are going to indicate direct cost of so cost of material, equipment and labor. Now, if the cost activity A, this is spread over 2 months, so how much will be the cost for first month? So half of 50,000 is 25,000. Okay. Then monthly indirect cost is 5,000 for all 4 months. So each month have indirect cost we have assumed is 5,000, 5,000, 5,000. Okay, for all 4 months. Now monthly direct cost is 25,000. So half of activity A is 5,000. So by this way, total cost, monthly total cost become for month 1 is 30,000. 25,000 plus 5,000 become 30,000. For the second month that you have seen in the previous slide, they were referring that for the second month cost will be for activity A is 50%. So it's 25,000 plus activity B is total is 40,000 for 2 months. For this month will be 20,000. And activity C is total is 60,000 for 1.5 months. So for half month we will take 1/3 of 60,000. So it will be 20,000. So when we add up these three costs, 25,000, 20,000, and 20,000, so it will become 65,000. Plus 5 is 70,000. So let's see how much cost for the third month. So half of 40,000 from activity B, 20,000, plus 40,000 from activity C, from 40,000 from activity C, plus 15,000 from activity D for month number 3, half of the cost for D for this month. So when we add these three figures, 20,000 and 40,000 and 15,000, so we are going to get 75,000. And then for the fourth month is we will make half of this activity D, half cost of 30,000 is 15,000. So now it's we have calculated a monthly direct cost. Okay, that comes 25,000 for first month, 65,000 for second month, 75,000 for third month, and 15,000 for the fourth month. Now we add indirect cost that is constant for each month that is given like 5,000 for each month. So when we add this total monthly cost, direct cost and indirect cost. So 25,000 plus 5,000, we are going to get 30,000. Then 65 for second month, 65,000 plus 5,000, we are going to get 70,000 for second month. For third month is 75,000 plus 5,000, so we are going to get 80,000. And for the fourth month is 15,000 plus 5,000, so 20,000. Now we will make this cumulative monthly cost. For first month is 30,000. For second month is this 30,000 plus 70,000. It will become 100,000. For third month is 100,000 plus for third month 80,000. It will become 180,000. Now for the fourth month is 180,000 plus 20,000. It will become 200,000. So we have calculated all the cumulative cost. Now we will draw the S curve is a graph between time. Time is given in months. So month number 1. Sorry, month number 1, 2, 3, and 4, and then on the y-axis we are going to assume the cost is like this. First point is 50,000, second is 100,000, third is 150,000, and fourth is 200,000. Okay, so now our first point is we have to draw this. We are going to represent in thousand. So it will be 30,000 will become just 30. So it's like below the 50,000 point. We at this point we are going to get with 30,000. Second month, we are going to get point with the 100,000. So we draw 100,000 at second month. Third month, we are going to get with the 180,000. 180,000. Like we have here 150 and 200. So below 200, we will go to the graph and mark this point at 180,000. Okay. And fourth month, we is 200,000. So we will mark this point at this is 200,000. So first point we got with the 30,000, second point we got with 100,000, third point we got with 180,000, and fourth point we got with the 200,000. Now, in terms of percentage, the total cost, monthly direct cost and indirect cost total is 200,000. So 30,000 divided by the total cost, it will become 15%. Then 100,000 divided by the total cost, so in terms of percentage, it will become 50%. 180,000 divided by 200,000, it will become 90%. 200,000 divided by 200,000 one, so it will be 100%. So we can this is the S curve, you know. Then we join these points. So in terms of percentage, they are month number 1 15%. Month number 2, 50%, month number 3, 90%, and month number 4 is 100%. So this is the S curve. What is going to tell us that as a contractor, if the total cost of the project is 200,000, direct and indirect cost, then contractor planning is that they will spend 30,000 in first month. They will spend another 70,000 in second month. So cumulative spending will become 100,000, and they will spend another 80,000 in third month. So cumulative spending from the contractor side will become 180,000. They will spend another 20,000 in fourth month, and the cumulative spending from the contractor side will become 200,000. Now this curve also give information to the owner that if they have to make payment, you know, so this will be the planning of the contractor, the way they are going to plan to spend project from the bill of quantity cost. So, or if the owner has to pay the payment, so it means first month the bill approximately will be 30,000, and second month will be 70,000, and third month will be 80,000, and fourth month will be 20,000. So this is like it gives information to the how the contractor will spend money, or how owner need to arrange money to make clear the payments. So with this, we will move forward to the next slide. So actually, this curve, you know, now what we have seen here, this curve we call it S curve. S curve, the way it's going, like a lazy S. So we call it S curve. Now let's see what is written on the slide. Now we are going to see other things like how much is profit. Cash flow to the contractor. The flow of money from the owner to the contractor is in the form of progress payments. So contractor will get money in the form of progress payments. The progress is demonstrated by the 4 activity example, the same like figure we have seen before. Assume the contractor profit is 25%. Now they are saying that contractor profit is 25% in his bid. So 25% of 200,000 will become 50,000. So total profit of contractor that they are going to include in the bid is 50,000. So 200,000 multiplied by 25% means 0.25. So the total bid price will become 250,000. So because before what you have seen is total direct cost and total indirect cost. Okay? So that was 200,000 plus 50,000 as profit. So total amount of the project will become including the profit of the company. It will become $250,000. Now, owner retains 10%. Owner retains 10% of the progress payment until 1/2 of the contract. So 1/2 of the contract will be like 250,000 is the total contract amount. So half amount of the contract will be 125,000. The progress payments will be billed at the end of the month. So contractor will submit the payment at the end of each month. Owner transfer the amount minus retainage to the contractor 30 days later. So now owner will deduct retainage 10% for half of the contract. So now contract in our case is just four months contract, so it means that there will be deduction for a retainage for 2 months at the rate of 10%. And then the work done in the first month, after 1 month, contractor will submit the bill, and then the consultant, supervising consultant on side, and the owner both will have 1 month that consultant will verify that bill and give it to the owner for releasing the payment. So the owner both and consultant will have 30 days to pay first payment to the contractor. The amount of each progress payment can be calculated as, with this what we have discussed. Based on that, the amount of first payment is we have total cost is direct cost plus indirect cost. Okay, so then we have to increase each payment, each amount. In the previous figure that was 30,000, we have to increase it 25% to include the profit. So we either if you have 100 and then you have to increase 25, so 100 plus 25 it will become 125, or you can multiply with 1.25, so 100 it will become 125. So similarly here you have the direct cost and indirect cost, you can multiply it 1.25, this cost will increase, direct cost and indirect cost both will increase by 25% if we multiply it 1.25. Now minus 10% is the retainage of the same. 10% is the retainage of the same. So within bracket is same amount 1.25 and say the indirect expenses plus the direct expenses. Now we will calculate by having this. So in the next slide, the same we are going to put and we are going to see what will be the first payment and second payment and third payment and fourth payment is going to look like. So here we can see the same payment we have seen before. Payment is that we have here pay 1.25 indirect expenses plus direct expenses minus retainage 10% retainage of the same. Okay. So for first payment we have indirect expenses plus direct expenses. From that figure 12.1 we got 30,000. So we multiply it 1.25 to increase this to include the profit 25%, minus 10% of same, okay, 1.25 into 30,000. So this will be the deduction or retainage that will be withheld by the owner from the first payment. So total that contractor will get first payment that will be 33,750. For second payment is same like 1.25 multiplied by, so total was direct cost and indirect cost, total was 70,000. So 1.25 multiplied by 70,000 minus 10% of this amount deduction for retainage. So it's 0.1 within brackets is 1.25 and parenthesis 70,000, parenthesis close, bracket close. So we are going to get here second payment is 78,750. Now it's cumulative second payment, like first payment is 33,750 plus second payment is 78,750. So add up these two. So second cumulative payment will be $112,500. So now deduction, because half of the period is the deduction for retainage. So there is only two deduction. In the third payment, there is no deduction. Okay. Third payment is payment number 3 is we increase 25% to that figure that was 80,000. So there is no deduction for retainage for the third payment. And so third payment is 100,000. Now cumulative third payment 100,000 plus cumulative of second payment is 112,500. So this becomes cumulative to 12,500. Fourth, fourth payment is just there was 20,000 that we got from activity D. 15,000 half of activity D plus 5,000 overhead cost, so it's 20,000. So payment we have here, we increase this payment by 25% to include the profit of the contractor. So it's become 25,000. Now, how much was the retained? If we multiply these things, 0 0.1, then 1.25 into 30,000. So first month's retainage deduction was 3,750. Second month retained deduction value, if we calculate this 0.10 multiplied by 1.25 multiplied by 70,000, so that deduction will be retaining deduction will be is 8,750. So total retained reduction is we add these two values, it's 12,500. So with the final payment, if every work there is no damage or there is no defective work from the contractor side, then with the last payment, the contractor will get back the this retainage also with the last payment. So we fourth payment we have 25,000 plus cumulative of payment number 3 is 12,500. Plus this is a total retainage also will be paid back to the contractor if there is no defective worker. Okay, that was like retaining was withheld as a guarantee that contractor will complete the project to the satisfaction of the consultant. And if there will be any settlement in the flooring or any damage or any cracks, that contractor will hand over the project in good shape. So this was the purpose of keeping retainage for just for a half period of the contract. So in this case, it's given 10% retainage. But anyway, so now this if work will be handed over by the contractor in a good way, so retaining will also be returned with the last payment. So then it means total cumulative payment will become 250,000, including the profit. So this was the contract amount. Without profit was 200,000, and including profit, cumulative 25% in profit was included. So it has become 250,000. So now with this, we can see the in the next slide we will see this how they have shown the payment. Here they are going to say just a little bit in vertical the cash flow to the contractor. Okay. The revenue profiles lag behind the expense curve, like S curve, as shown in figure 12.2. We are going to see in the next slide. Revenue profile has a stair step appearance because the progress payments are transferred in discrete amount. Okay? So these payments were at the end of the month, so it's not like a contractor spending every day. Okay? So it's payment received monthly based from the owner. So it will be stepwise appearance. The difference between revenue and expense makes it necessary for the contractor to obtain financing. So we'll see in the next figure that there is always a difference. The contractor is building the project by taking overdraft from the bank or getting loan contractor is going to finance the project, and payment they are going to get based on their work done. So usually bank extends a line of credit to the contractor called overdraft, often after charging interest. So bank they charge if they have to give this credit line for financing the project. So maybe some banks they would like to charge interest, or maybe if there is some banks may in like Islamic banking, maybe they will not in charge interest. So here that figure, look like, so what was we have seen before that the points, first point we got like if the contractor got the project, so contractor plan to buy everyday material, they pay for material, they pay for labor, they pay for the equipment, so everyday spending. So first point, without a direct cost plus indirect cost, so total first month spending was 30,000. Second month spending was 100,000 that we have seen before, and the third month was 180,000, and fourth month it was 200,000. So now, by including a 25% profit, so we that there will be four payments. So first payment, like the work done during the first month, that contractor will submit to the consultant after first month. Okay. Then the consultant and the owner, they will have 1 month to check and verify and release this payment of first month. So the first payment first payment that contractor is going to receive from the owner, that will be is 33,750 that we have just calculated in the previous. So here it's divided by 1,000. It's shown in thousands. So it will be first payment will be like 33.75 or 33,750. So this, then for the second month work, so the cumulative payment that contractor will receive, that will be 112,500. And third month payment that they will receive will be, is what we have seen is cumulative is 12,500. And fourth, they will receive the retainage also. Total retainage is 12,500, and it will be total money for the contract. 250,000 will be received, at the month number 5 for the fourth month. Okay. So these this is stair steps. Shown, and this is like now this curve shows the S curve shows the spending. S curve show the spending, and this is the cash flows in for the construction company, the way they are receiving the cash, or the way they are receiving the payments from the owner. So these payments are in steps. There is a difference. There's a difference. It means contractor is spending more in building the project and receiving less. His cash flow become positive with the final payment. Okay? But otherwise, they will be getting a loan or getting overdraft from the bank, so they will be financing the construction. And payment will be received on the basis on the work done. For the work done of first month, payment will be received by the end of the second month. And for the second month, payment will be received by the end of the third month. Okay, so payment will be like the consultant and owner will have 1 month to check and verify that the bill submitted for the progress payment by the contractor. Okay, with this we'll move forward. Cash flows to the contractor. Some contractor request mobilization money or submit front-loaded bid to the owner so that are reduced or zero overdraft occur. So these sometime contractor they ask from the owner that mobilization advance, or if they submit front-loaded bid, this will be unethical. So some contractors they do this to make their cash flow positive as soon as possible, so that they can avoid overdraft from the bank. They overdraft, usually they have to pay interest. So this can occur on a negotiated contract. These kind of mobilization advance usually owner are ready to pay on a negotiated contract, or we call it them cost plus contracts, in which the owner has great confidence on the contractor. So if contractor trust, owner trust on the contractor, then they are going to give them advance payment. Sometime if the owner does not agree, the contractor will charge higher financing rate that the owner must pay. So if they don't agree, then contractor can ask, okay, there was interest on those payments if there is something delay from the owner side. Nonetheless, submitting a front-loaded bid is illegal and unethical, so such bids should be rejected during the bid evaluation process. Okay? So this is like if a contractor is going to submit a front-loaded bid, so this is ethically is unethical and it is also illegal. And during the bid evaluation process, so the owner or his consultant they can reject these bid that are front-loaded bids. So see the figure what they have. They are showing that there is in this case figure 12.13 shows that the owner they trust on the contractor and they pay mobilization advance at time zero to the contractor. So it means they got advance money, mobilization advance money from the owner, and with this money, so the contractor can build site officer, or can buy material, or they can finance this construction. So it means if this will happen and owner pay mobilization advance, so it means contractor is always working with the owner's money, with the owner's money, and they will be spending this money, for building the project. Of course, with the progress payments, so from each progress payment, whatever they have received mobilization advance, say for example 100 billion. So every month they will return that amount, maybe 10%, from each progress payment to the that will be returned back until the whole advance payment is adjusted. So this is like the influence of mobilization payment on the profiles. It means in this case, contractor is working with the owner's money by getting the mobilization advance or mobilization advance payment. Now there is a so with this we have learned about how to draw this S curve. To clarify, I'm going to put another example so that things should become clear to my students. So what is the second example is that they are talking that there is so we will read the way they are going to put the question. A contractor is preparing to bid for a project. He made his cost estimate together with the schedule of the work. So contractor has made his cost estimate and schedule how they will finish their work. His expected expenses and their time occurrences are shown in table 1. So in the next slide, we will see the table that their expenses, how much they are going to like spend for mobilization or subcontractor for material, for equipment, for overheads. So everything is given in the table number 1. His expected expenses and their time occurrences are shown in table 1. Values for mobilization, subcontractor cost, material cost, payroll, like they pay cash to the labor, or they give check, so or they directly deposit amount in the account of the labor. So this is like payrolls. Okay, equipment cost, like the cost for equipment used on the project, and overhead costs are multiple of the 1,000. So this is a cost are given multiple of 1,000. For simplicity of analysis, contractor assume that all expenses are recognized at the end of the month in which they occur. Contractor need to add 10% to this estimated expenses to cover profit and overhead expenses. So the 10% is like we have to add in those expenses as profit. the total will be his bid price. Okay, so with those direct cost and overhead cost or indirect cost plus 10% addition to those, it will become the bid price of the contractor. Now, assume contractor's work done at the end of each month is also given in table 1. Now, the payment expected payment that the contractor will receive, they are also given in the table 1. Contractor is to submit the work done monthly for approval. The supervision consultant or consultant and the owner will have 1 month for checking, approving, and is supposed to pay the contractor after 1 month. So they will have 1 month to clear the progress payment. Owner retains 10% of all the validated progress payments for 6 months. So now they said that there will be a retainage deduction 10% for 6 months. Okay. So given contract is like 13 months, half period will become 12 and a half. So it is given that the retainage will be deducted for 6 months. All the retainage will be paid back to the contractor with the final payment on satisfactory completion of the contract. So they say that if the contract will be completed, there is no defective work or damage or any settle down of any flooring. So then they will they will pay back the retainage to the contractor with the last payment. You are asked to develop S curve for the contractor expenses and income curve. Okay, so you need to develop the graph or the S curve for the contractor's expenses, the way the contractor is going to spend money, and the way the contractor is going to receive money from the owner. So there are some abbreviation notations are used, like M is used for month in the table, MOB is for mobilization, SUBC is for subcontractors, EQUIP is used for equipment, O/head, this is used for overheads. In the next table, like the first one is this M is month, second is the mobilization, and third is subcontractors. So fourth is material, then payroll, like the contractor is going to pay to the cash money or that deposit in the account or the check. So they have like equipment and the overheads. Okay. So all these figures shown in in thousands. Okay. So 40 means 40,000. So it means if we add this figure, it becomes 40,000 for. And for here, it's 10,000 plus 10 plus 10 plus 10 plus 20 and plus 1, it will be 51. So actually, it will be 10,000, 10,000, 10,000, 20,000, and 1,000. So it will be 51,000. So figures are shown in thousands. Okay. So for similarly for other, it's 80,000. We got total 80,000. Third is 106,000. Similarly, like 12th, we are going to get 85,000. Okay. The way owner is going to pay payments is also given. Like the first payment will be 41,800, then 53,295. Third will be 83,600. Similarly, the other payments. So in the next graph, we will see this how we are going to put the solution of this. But we have seen in the first these total of 40,000, 51,000, 80,000, or 106,000. This column is shown in this also. Like first we have the month and month from 0 to 13, and then total those payments 40,000, 51,000, 80,000, 106,000, and so on. And then from these payments, we are going to so this is from the previous graph that the payments are expected payment are given like 41,800, 53,295, 83,600. So this is also exactly as given in the second column, third column. So all the payments of 41,800 as they are given in the question, so they are given. So here we have the this total direct cost and indirect cost, and then we have the payments also This is like months are given, so then your direct sum of direct cost and indirect total is given, and then payments are also this is given. Okay. Then now we are going to increase by 10% those direct costs and indirect costs by including profit. So 10% of 40,000 will be 4,000. 4,000 plus 40,000, it will become 44,000. Or we just multiply the second column with the 1.1, so we can get 44,000. So we multiply 51,000 with 1.1, we are going to get 56,100. Similarly, for 80,000, we multiply at 1.1, it will be 88,000. Meaning is that the direct cost and indirect cost, that is 80,000 plus 10% of this is 8,000, it will be 88,000. Similarly, for all the figures, and if we add up this, so total bid price will become 1,342,000. And similarly, now we have this bid price. So this bid price, we are going to make it cumulative. So 44,000 comes here, and then next is 44,000 plus 51,100. It will become 100,100. So now 100,100 plus 88,000, it will become 188,100. Similarly, all the cumulative cost, it will be equal to the last one will be equal to the project cost, that is 1,342,000. Okay. So now what is going to happen is so there will be a retainage from the payments. Okay. So like payment was 41,800. 10% deduction of retainage of this one, it will be 4,180. Okay. So now we are going to calculate actually cumulative payments. Okay. So to do that, first we have to deduct retainage for 6 months. Okay. So first payment was planned 41,800. So 10% reduction of retainage will become 4,180. And then first payment will be this payment minus retainage, it will be 37,620. Now is for the second is payment is 53,295, is 10% deduction of this is 5,229.5. So this payment will from 53,295 minus this retainage. So it will be 47,965.5. Similarly, the third retainage, we have third retainage from this and fourth retainage, fifth and sixth retainage. So up to 6 months, we will deduct the retainage. 7 month payment is same, like 157,795. It will be paid same. You know, there is no more deduction for retainage. Okay. Deduction for retainage is then next 8th month is also 131,607. So that it will be paid same. Okay, until we have the last one. So now what is going to happen is then we see the cumulative payments. Okay, first is 37,620, it comes same. Then is the second one is we will add 37,620 plus 47,965.5. Okay, so it will become 85,585.5. And then 85,585.5 plus 75,250. So it will become 160,825.5. So by this way, we have all the cumulative payments, and with the last payment, we will return back this retainage also if there is no defective work. So this retainage 50 total retainage for 6 months becomes 58,415. This will also be returned back to the contractor. So then whole money will be paid back. Okay. For the project, that will become exactly what we have. The bid price was 1,342,000. Okay. So with this way, you know, now we have all the cumulative expenses column, and we have the cumulative payment column. Okay. And here we have the months. So we can put these months and draw the graph between cumulative expenses and cumulative payment. Okay. So if we see the graph next that I have drawn by hand is so we will see that on the x-axis we have month is month number starting from 0, 1 month, second, third, fourth, fifth, seventh, eighth, 9, 10, 11, 12, 13, 14. Okay. Then on this side, like first, expenditure expenses at time 0 was mobilization. Okay, so that was 44,000. Then we have second point was 100,000 100,100. So it's, we are going to show in thousands. So it will be 100.1. So here on this side we have cumulative expenditures and income. Income are the payment. Okay. So cost is shown multiple of 10 raised to power 3. Okay. So it's then third is cumulative was 188,100. So that is shown here with the 188.1. Okay. So the next one is shown 304,700. So it is shown 3047, and the next was 443 443 300. So it is 443.3. So all the the expenditures that the contractor is going to spend money for building this project is shown, until the last that is going to get at 12 months is 1,340,000. So it will be like 1,342 in terms of thousands. So then payment, first payment, what we is going to receive is 30,620. Yeah. So we are going to show here that first month work done will be submitted, and then consultant will have 1 month to pay this payment. So the start of after 2 months, the first payment they will see is 37,620. Okay, that is in thousand shown as 37.6. And next payment cumulative was 85,585.5. So we show it in 85.6. The next payment was 160,825. So just showing a 160. So similarly, all the steps, like the way they are going to receive payment from the owner. So the last payment, cumulative payment with the receiving the retainage also. That retainage was 58,415. So we will receive the total amount of the project, that is 1,343,000, okay, or 1,342,000. Okay. So this is like all about how we are going to develop an S curve, and this is going to give us information that how contractor will spend money for building the project, or the way like the owner, how much owner need to pay on monthly basis. So this expenses and payment profile is going to provide this information. Like S curve is very important. It gives information from start of the project until finish of the project. So then it's for the purpose of understanding for the students and engineers, we have talked about that the cost, direct cost was shown separately and indirect cost was shown separately. And then then cumulative. But then profit was shown separately. But when usually contractor they submit the bid to the owner. So there is just a bill of quantity, just one cost, So they first prepare the direct cost, and then in terms of percentage they increase those costs with the they increase those costs with having like how much they have to put for the overheads or indirect cost, and then they are going to add the profit also. So contractor will multiply that profit also with all those costs. It will be just one cost, one figure submitted for all the bill of quantity. So S curve, we are always going to draw based on the bill of quantities, okay, the cost of the project. So from that, we are going to know that how we are going to like our planning and how it will be like actual construction, whether we are going to do faster or our actual construction will be slow than what we have planned and what we have submitted the S curve at the time of bid submission. So by this way, the project managers, they can control the cost of the project. So with this, gentlemen, we have finished this chapter, how to develop the S curve for the project, and it means we have finished this chapter number 12, and inshallah next time we will talk about the next chapter. So allow me to say to close, kafara majlis, like dua. سبحانك اللهم وبحمدك نشهد أن لا إله إلا أنت نستغفرك ونتوب إليك. So I thank you, all of you, and thank you so much. And inshallah, we'll talk to you next time.